So the last Friday was indeed very bad, and not only that, it makes the entire week worse for the Wall Street. And we have officially entered into the third week of calendar year 2002, December month, and it looks like you cannot expect any such Santa rally this particular year because the overall trend is in doldrums. And if there is anything, so the chances are very less because most of the market participant will be on holiday from next week itself. So let us see with this backdrop what is happening as far as the overall market and the major indices is concerned, and what one can expect as far as the Monday is concerned. So let us see, and let us start with our first indices, which is Dow Jones. And as far as Dow Jones is concerned, what I am curiously looking at uh, is two more important or two most important levels right now. And here we are, these two important levels, and I'm looking at the daily chart. So the two most important support levels we have here is 32,366 and 32,100 on the downside, and you can see most of the moving averages are collide in between these zones. So these two levels are very important. If Dow Jones falls below 32,100, then obviously you will see further downside going forward. So the basic range or the current range in between which Dow Jones has been trading right now is 32,100 and 32,300, 350 on the downside, and looking at the upper end of the range we have 34,380 and 34,700. So this is what the current range looks like, but as I told you, the information which we have here, or the price structure which we can see for Dow Jones, is on the downside right now. So let's see how it will make its short term low, or whether it will hold at or above or in between 32,100 or 32,360 or not. Talking about the Nasdaq and Dow Jones are indeed showing some similar kind of patterns, and you can clearly see how Nasdaq is indeed moving, and the price chart of Nasdaq is comparatively weaker than the Dow Jones. So what do we have here as far as Nasdaq is concerned? For Nasdaq, it is now retesting its previous lows, or very near to its previous lows or the recent lows it has made. So it is very important for the Nasdaq to hold, and because it is highly sensitive to interest rate, and you will see that whatever hike the US Fed has made, it will come into impact, and the entire market will face that heat from 2023 onwards, calendar year 2023. Okay, so after 2 or 3 weeks you will see the impact started coming into the market. So it is very important to discuss or look at Nasdaq. So for Nasdaq we have two most important support level, 10,547 and 10,150. If Nasdaq falls below 10,150 or more, then the downside will start again. So for Nasdaq as of now there is no such upside. If you want to go for a range on the upside, we have 11,520, but it is less likely that it is going to make any big move. If there is any, we will definitely look at it. So first save your support levels, or save the levels on the downside before thinking about the upside. Now the most balanced one is the S&P 500, and if you're looking at S&P 500, S&P 500 is also showing similar kind of move, and the trend is very easy to I mean, you can clearly see the trend is very easy, in a sense that you can understand what's happening as far as the price action is concerned. And this is the resistance zone. If I may draw a line like this, you can clearly see S&P 500 has indeed hit the upper end of the range or the resistance zone, and from there it has started falling, and that's why it's the most balanced one, and you can truly get a sense of the market and how the market is indeed moving. So for S&P 500, I just want to give you the big picture, and the big picture is saying something like this. Okay, so it is quite scary, because if this comes into force, okay, if this comes into force, or if the trend or the range whatever you are looking here will will be a reality, then you are here for a big downside going forward. This downside has just started, so better be very much, I would say, cautious about the move going forward, because if you are looking at S&P 500, it is very important for S&P 500 to take support in between, somewhere in between 3634 and 3491, because if it falls below, if S&P 500 falls below 3491 or 3490, the next two big support will be 3200, and then we have our big support which is in between 2800 and 3000. So what one can expect here is a big correction of nearly 20 to 25%. So things looks very scary as of now, and a 20-25% move and S&P 500 can cause a big damage in the overall market. So this is something which you need to understand. So right now, for all the indices, Dow Jones is looking quite okay, but if the overall mood and the market is not at all looking good, obviously sooner or later the Dow Jones will also change its course of action, and we have to see how things moves going forward. So this is the end of the video. Thanks for watching.